to strike the last word.
Gentleman's recognized for 5 minutes.
Mr. Chairman, I would hope that this markup would be delayed until September. Major changes were made in this bill just last night. I've heard the other side complain about bills that come up before they can be adequately read, and particularly the changes about the conforming loan limit in high-cost areas changed last night. We haven't had any testimony from experts about those changes. The gentleman from North Carolina says we in this room need to own the problem. It was our fault. We made a mistake. The disaster of 2008 rests here. Well, if we're going to attack Chairman Oxley's committee, let the ghost of Chairman Oxley respond. He says the critics have forgotten that the House passed a GSE reform bill in 2005 that well could have prevented the current crisis. The House stepped up on this. What did we get from the Bush White House? We got a one-finger salute. Chairman Oxley's comments are in an article titled, "Oxley Hits Back at Ideologues." I miss that man. We're criticized Dodd-Frank on the theory that it's going to raise home prices only if a proposal called premium retention is passed, and it won't be. But this illustrates the fact that the QM and QRM definitions are critical. Mr. Chairman, we ought to write those definitions here instead of leaving it to the regulators. What we've had to do instead, Gary Miller and I got over half the House bipartisan to pressure the regulators advise the regulators not to go in the wrong direction here. Defining QM and QRM is critical, but abolishing them is a terrible idea because it means that we're going to see no limits on subprime loans, and no doc loans, and who wants to open that up again? This bill eliminates any restriction on the no doc loans, except maybe the utility will pass regulations of its own. Oops, they may be just like the Dodd-Frank regulations. No one defends the status quo, but that doesn't mean we should go back to the 1930s. Nor does it mean that we should go back to 2006. The problem we had with Fannie and Freddie was that they had private sector objectives and public sector guarantees. They were looking for market share. They were looking for price per share and earnings per share and stock options. And with those kinds of incentives and government guarantee, they went astray. We now have a system where the decisions are being made chiefly by governmental officials who don't have a price per share, earnings per share mentality. We're making a profit on the business being written now. We are providing loans at low rates, and we are climbing out of this recession. So let's scrap all that and go back to the 1930s. What does that do? Well, the gentleman from Georgia says we'll still have 30-year fixed-rate loans. And he's right. The gentleman from Massachusetts pointed out that 1/5 of the current buyers will be able to get those 30-year fixed-rate loans. What about the other 4/5? We're told Fannie and Freddie doesn't set the terms. We all know that they do because the banks make the loans that they can sell to Fannie and Freddie. We're told the 30-year mortgage isn't important because people only stay in their homes for 7 years. But wait a minute. Even if you're only going to stay in your home 7 years or 17 years, the monthly payment depends upon the length of the mortgage. And even if you plan to stay only 7 years, if you can't get a 30-year mortgage, you have to make higher monthly payments. Now, maybe you'll say, honey, let's just eat beans for 7 years so we can make those higher payments. But the bank won't give you the loan because they don't believe that you can really do it. They don't think that you can devote 40% of your income to making those payments. And if they can't give you a 30-year loan, if they have to give you a 10-year loan or a 7-year loan, the payments are much higher. You don't qualify. So what does this do to the U.S. economy? It takes a huge number of buyers out of the market, and home prices plummet. And I didn't understand the logic of this until Mr. Royce explained the FHA will be there for those in greatest need, that poor people will still be able to benefit from government-guaranteed mortgages. Well, with home prices plummeting, the number of poor people will skyrocket as well. We will all be poor enough to benefit from the new limited FHA. Who is going to be able to survive in this economy if we take 4/5 of the buyers out of the home market and say, you can't get a 30-year fixed mortgage. Half of those buyers are going to go away. If you see a giant drop in the number of buyers, you see a plummeting of prices. I've seen it in 2008. I don't want to see it again. I yield back.
Time of the gentleman has expired.